Good morning. It's March the 16th, 2017. We'll get started with our customary disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Well, I hope everybody had a great evening. We're in a warm-up here that might take us to 80 degrees by next Monday. It's been really, really cold here. We got the backside of that storm that swept through the East Coast, and it seemed a little colder than the temperature said it was. So anyway, I'm all for global warming, as you well know. I think that's a much better alternative than global cooling. Okay, yesterday we had the Fed spoke, raised interest rates 0.25%. Yesterday we came in saying the trade with the most potential was just get long. 0.25% was built into it. We were going to get a rumor fact trading situation, and we did. The issue right now is this 0.25% interest rate increase. Goldman is saying the next one comes in June and then September. That's not bullish news. And I put an article up this morning from Mohammed A.L. Arian. I guess I got his name right at PIMCO, or was it PIMCO before he resigned? And he said right now the biggest change yesterday we saw was that the Fed was going to lead. They weren't going to play catch up. So we'll see if that's actually true or not. Goldman says June and September. The Fed said 2 more interest rate increases this year. So that's not bullish news. We do have news this morning. Starts and permits plus 1.27 million. Jobless claims 240. No one will pay any attention to that. Philly Fed 30. Jolts 5.45 million. No one will pay any attention to that. Although it's rumored it's Janet's favorite measure of where the labor market is. And natural gas will draw 60 BCF. The news focus will be starts and Philly Fed and the direction of the E-mini. And the E-mini looks higher today. So we have a single print at 20. We have single prints at 21.5 to 22.5. So 20 to 24 is pretty good resistance. So our first sell is 19 to 23, followed by 27 to 31. On the buy side, a little bit lower. Let them come back down and test this area right here. Lean against that ledge. So 9 to 13 by 1. 1 to 5 by 2. If we get through 24, right up here, then we could make new highs. And we'll just have to see if that happens. That's kind of where we are right now. So if the E-mini rallies, I believe treasuries will sell. And after a trend day up, the other thing that worked in our favor for a sell this morning would be a pause day. Okay, looking at the 30-year, 28 to the buck, 1, 3 to 7, sell 1, 15 to 19, sell 2. On the buy side, first support will be 16 to 20. So 9 to 13 buy 1. Pick up this area right over in here. And then 29 to 01 will be buy 2. Gold was up overnight, made it to 1225. It was up this morning when I looked at it. So here we are. We've got a dent at basically 1230. It is pointed higher, so 29 to 31 sell 1, 34, 36 sell 2. On the buy side, 19 to 21, 15 to 17. Picking up this area right in here. And then picking up that area right there for the buy side. Okay, inflation. The Fed says there is no wage inflation, and they're right about that. With all those people that could come back into the workforce, no one is falling over themselves to hire people these days, unless you're an ex-politician being held by a lobbyist or a big major bank deemed too large to fail. The fix is always in for those people. And why? They've got their buddies in the departments that they've just left, and they know which strings to go pull to minimize the impact of federal intrusion, regulation, whatever it might be. Okay, we had a 90 to 108 sell last night. We just touched it in the morning. That looks reasonable. London's last rotate up was 85, 86, so we'll make 85 to 95 sell 1, 815 to 8 1/4 sell 2. The interest rate increase yesterday is not good news for the euro, but it did trade up, and the selling in the dollar for rumor fact probably had more to do with that than anything else, in my opinion. Okay, 50 to 60 buy 1. I think the easiest trade to see is failure to take out and hold 108, and then 107.25 buy 2. Okay, for those of you that can trade London time, this is a magnificent contract, and it trades well for us a couple of days each week on our time. But gold and currencies, if you can trade London time, you really have an advantage there. The trading is slower, but that's where the moves start. The tail for gold and currencies is the United States. The dog is London. And you want to trade with the dog whenever possible. Okay, crude oil traded up. We're in the April contract today. The May contract volume is close. It's about 25% less than the April contract. We will be in the May contract tomorrow. It expires on the 20th, so expiration and rollover tends to rally the market. So fundamentals probably aren't the reason for the rally. My guess is the rally was based on start of the roll from April to May contract. Sell 1 50 to 75, sell 2 50 to 50 1/4. On the buy side, 48.75, 49 buy 1, 48 1/4, 48.50 buy 2. Have to admit, crude's pretty resilient with all this bad news that keeps coming at it. And Saudi Arabia explained theirs away. Well, we pumped it. We're not going to sell it. We're going to store it above ground. Unless, of course, we can find a buyer for it. Move it right on out, right? No, we wouldn't commingle those barrels. I mean, there's no way to know. All we know is that they pumped more than they said they were supposed to. Okay, the ES is pointed higher. We might be getting that second test of 2400. Right there. Can't really make a top usually without a retest of that high. So we're pointed up. Bull market corrections are 50 to 70 points. We're just shy of a 50-point correction. I think we missed it by a tick from the high. So everything is set up technically, structurally for a retest of the high up here at 2400. Definitely have a P. Yesterday we came in. The tendency since March of 2009 has been for the stock market to rally into the FOMC announcement. Our call yesterday was to get long. Our first buy was 65.67. The low was 66.75. And the market rallied into the FOMC. Then we said you'd get a reaction. We did. But you wanted to get long on that reaction. And just hang on for as long as you can. And that's exactly what happens. So we know of what we speak. Okay, resistance is at 90. So selling failure to take out 89.91 is sell 1. I really think if we get through that level, 99 to 2400 would be sell 2. Obviously, we've got a low volume number here at 94. So we can put a question mark right there. But if we break it out this morning, no reason not to go to 2400. The underlying economic news that Janet raised interest rates on was GDP now is looking like somewhere plus 1% for the first quarter. The sentiment numbers have been through the roof, and we don't get a consistent economic indicators being higher than forecast, but some of them are. So it takes probably 18 to 24 months for the effects of tax cuts, rules and regulations to kick in. So the optimism is in place. Now Trump has to deliver. And Trump is being fought on everything. Every appointee, every bill is going to be slowed down. And why would the Democrats do it? They want to paint or create as favorable a situation for themselves and as bad a situation as they can for the Republicans for the 2018 elections. And they are masters at what they do. The Republicans side with the Democrats. I mean, it's really, really difficult sometimes to tell the difference between some of the Republicans and Democrats. So Trump's got his hands full, and it remains to be seen if he can pull it off or not. For our country's sake, I hope we get back to 3 to 4% economic growth. I hope we cut rules and regulations. The way you get back to 3 to 4% growth quickly is to cut taxes. And there's about a 2-year lag on the revenues. Every country in the world has done that. Even the ex-Soviet Union nations all did that. Singapore, Hong Kong, Taiwan, you look at them. That's how it's done. And the Dems and their minions know that. But they're going to fight it every step of the way. Starts and permits plus 1.27. Number could come in higher. Sentiment's awfully high in that sector. Jobless claims 240. No one will pay any attention to that. Philly Fed 30. They will look at that. Jolts. No one will look at that, but Janet Yellen. And nat gas draw of 60 BCF. The focus will be starts and permits and Philly Fed, and then can we get through 2390 or not? That number that looms large. I think the first trade is to find a place to get long. Okay, it'll take a bit to get everything up and posted. I'm going to do that. I will be back with you as soon as possible.